Good morning, Bitcoiners. Hello, and welcome back once again to your Bitcoin economic calendar, the news and analysis you need to start the week off right in Bitcoin. I'm Mauricio Di Bartolomeo, co-founder of Ledn, and today is Tuesday, April 26th. We have a very special episode for you today. Very busy week in the markets with a lot of volatility as we've seen in the past few days. In today's issue, we're going to start by talking about Bitcoin's performance since the start of the war, and we're going to compare that to other safe haven assets like gold and the US dollar, and we're going to see how Bitcoin has been faring as a safe haven asset since this conflict began. Second, we're also going to look at how the Fed's new hawkish tone could be impacting crypto markets and what we could expect in the weeks and months ahead due to this intention and action that the Fed is planning. And then the last thing we're going to talk about is the mega cap companies in the S&P 500, which are reporting earnings in the week ahead. We're going to drop some of those names and the dates that you need to look out for. And there's a lot more that you can check out in our blog version by clicking the link below. So grab your coffees, everyone. It's going to be a great episode today. And starting as we usually do with Bitcoin, we see that the prior week or last week, Bitcoin did dance around quite a bit between higher and lower levels, but finished the week at 39,467, just down 56 basis points from the prior week. This week so far into the session, we see that Bitcoin is slightly higher, basically up by 85 basis points. Currently trading just below 40,000 at $39,802. And this week or the last few weeks have given us a lot of volatility or turbulence, if you would. And there have been very big moves in what otherwise are deemed to be boring markets like bonds and foreign exchange. Now, interestingly, we can use Bitcoin to see the magnitude of some of these macro trends at play. And to start, let's take a look at what's been happening in foreign exchange by taking a look at the price of Bitcoin in US dollars, the price of Bitcoin in euros, and the price of Bitcoin in Japanese yen to see the recent relative strength of the greenback. And to do that, we are going to go back to the daily chart, and we're gonna set that chart up since the beginning of the invasion, which was around here, February 21st. So if we, right now, this is the price of Bitcoin in US dollars. So right now what we're going to do is we're going to overlay the price of Bitcoin in euro terms to this chart. And we're also going to overlay the price of Bitcoin in Japanese yen to this chart. And so from the chart here, we can see something quite interesting. So since this war started, the Bitcoin in Japanese yen terms is up 19.1% since the beginning of the war in Ukraine. If we look at Bitcoin in euro terms, the price of Bitcoin is up 13.67% since the start of the war in Ukraine. And if you look at the price of Bitcoin in US dollar terms, we see that Bitcoin is only up 7.15%. This is all during the exact same time period. In other words, what this means is that the US dollar has gained approximately 6% against the euro and approximately 11% or so against the Japanese yen in the same period, or 12% actually. Now, in US dollar terms, as we can see, Bitcoin is up 7.22% so far in the same period. So in other words, what this means is that the US dollar has gained approximately 6% in value versus the euro and approximately 12% in value versus the yen. Or you could look at it as the euro has lost 6% of its value versus the dollar and the yen has lost 12% of its value versus the dollar in the same 2 months. That is a lot of lost purchasing power for Europeans and Japanese people in general to lose in just 60 days. If you annualize those rates of devaluation of your purchasing power, they are very, very steep. So it's not, it's a pretty material change that is impacting these economies, as we can see. Now, let's compare Bitcoin to other macro assets during the same time period and see how Bitcoin has been faring as a safe haven asset or not, compared against the traditional safe haven assets in finance like gold and the US dollar index. And we're also going to throw in the S&P 500 just so we can get some context on the price performance of these assets. So right now we're going to keep Bitcoin in the daily chart. Again, same time period set up from the beginning of the invasion. And we're going to now overlay the price of gold on top of Bitcoin. We're going to do the dollar index, which is the US dollar compared against a basket of currencies, its main trading partners. And we're also going to look at the S&P 500. So as you can see, when we add this chart, when we basically take a look at comparing the price performance of these assets, we see something quite interesting. And that is that, first of all, Bitcoin has had the best performance in this time period since February 21st until to date. Out of all of these assets, it is up 7.15% in this time period. The US dollar index, which is seen traditionally as a safe haven in times of conflict, is up 6.12%. Gold is essentially flat for the period. And we have all seen the headlines that have come and gone around gold since this started. And then the S&P 500 is essentially down 1.57%, which is fascinating to see that Bitcoin has actually been outperforming gold and the dollar index throughout this event. Bitcoin has essentially been outperforming the best safe haven assets during the largest geopolitical conflict since Bitcoin's inception. And that is a very big feat for an asset that is only 13 years old. Now, switching gears from this and to basically try to get some insights as to what the Fed is trying to do and what this could mean for crypto. So markets seem to found some, and we wrote this actually yesterday, you can see it playing out this morning. Yesterday, after the Twitter deal was announced in the mid-afternoon, we saw markets found some relief after this transaction was announced, and this could be for a few reasons. But as we will cover on the following sections, what has been happening is that there is central banks are essentially waging an all-out war on inflation, and they're trying to squash corporate investment and disposable income by increasing the cost of borrowing, both for corporate debt and for people's mortgage payments. This will inevitably have a short-term impact on asset prices. However, a lot of the technology sector had been deeply oversold going into this, last week and this week, and the recovery that we saw yesterday could be short-lived. And again, so short-lived that between the time we wrote this last night and today, this has basically already faded. This enthusiasm seems to have already faded. And again, this is likely because this was some positive news that came out yesterday around Twitter, which kind of reinvigorated the market in a very oversold condition. But again, people are waking up and realizing that the central banks have no intention of stopping or slowing down their efforts to bring down inflation. This is a very interesting headline from CNBC that reflects just this. This came out yesterday. And it talks about how many cash-strapped Americans are feeling the sting as their cost of living spikes. Not only are they raising their mortgage payments by raising the interest rates, but inflation itself is rumbling through the economy, making prices of everything more expensive. So not only your mortgage is more expensive, your groceries are more expensive. So your overall cost of living has basically taken a hit. Now, while Bitcoin may continue to have strong relative performance, relative to gold, the S&P 500, the dollar index, etc., as we just saw, the trend for most asset prices is clear, which is that the Fed is doing everything it can to suppress asset prices right now and suppress inflation. And that will bring continued pressure to the downside. When there is a broad risk-off sentiment in the markets, correlations between different assets tend to increase as people look for protection, regardless of what sector they're invested in. And many financial assets start moving in tandem. We can see this play out right now as the 1-month correlation between Bitcoin and the S&P 500, it's nearing all-time high levels. As you can see from right here, we're basically at the all-time high that we've seen going back to 2018. And this is no surprise. Again, this is just more of that risk-off environment coming into play. Bitcoin has become quite ingrained now in the traditional financial system as well. So as this market continues to come under pressure, this may provide some wonderful buying opportunities for long-term investors in the weeks ahead. So we're going to cover a few more data points in the What's Ahead section, including Bitcoin option expiration week, which happens this week, and what that max pain point is and what market makers might be trying to look for given where those expirations lie. So more right now on the What's Ahead section. And as always, we leave you with what's ahead for the week. As we mentioned just now, it is options expiration week for Bitcoin this week. There's over $2 billion of notional option contracts worth of Bitcoin set to, or sorry, $2 billion worth of options or Bitcoin options in notional terms set to expire this Friday. The max pain point for April expiration, and again, the max pain point is where most of these outstanding options expire worthless, making the most money for the people who sold those contracts, which are typically market makers. The max pain point for this contract expiration seems to be concentrated between 34,000 and 38,000. And so somewhere around 36,000 is where the max pain point sits. And this is as per CoinGlass Analytics. Given this, there is a decent probability that market makers could look to drive Bitcoin into that price range if prices are trading within 2 to 3% of that range come Thursday. And this is a level or a range that market participants should keep their eye on as we get closer to that Friday expiration date. Now, as the market continues to come under pressure, we wanted to highlight some of the key support levels for Bitcoin prices, namely the MicroStrategy support line, which is the average purchase price of Michael Saylor's MicroStrategy's Bitcoin holdings. And that average purchase price is currently sitting at 30,200. This is important because institutional investors will likely look to defend this price level. And given how Bitcoin has been holding up in the current geopolitical environment, it would not be surprising to see some opportunistic institutional investors take advantage of an opportunity to add to their portfolios at Saylor Bitcoin prices. So something to keep an eye on is that 30,200 level on Bitcoin if we continue to break down in terms of support. Now, as we also mentioned, we get earnings reports from US mega capitalization companies, namely Amazon, Google, Apple, and Microsoft. They will all release earnings this week. And in addition to these mega cap stocks, we get about 180 other S&P 500 companies releasing earnings this week. Earnings will be a pretty interesting window into management expectations for the months ahead, what is left of the year. Keep in mind that these earnings reports are coming on the back of rising interest rates in the US, rising yields, staggering inflation, a resurgence of COVID, and some global supply chain issues. This is all in addition to the Fed's aggressive tone. And this is a lot to keep, to basically put investors a little bit on edge. Now, investors will likely be looking for a solid earnings week in terms of what the reports these companies are publicizing, as well as some interesting or strong guidance. If this does not materialize, this could add further pressure downside to the markets. In terms of economic data, the very interesting one we get this week is PCE, which is Personal Consumption Expenditure Index, another way of looking at inflation. And this is something that the Fed tracks very closely. So let's get into when that report is coming. And you can expect the PCE, Personal Consumption Expenditure, on Friday at 8:30 a.m. Eastern. And this will be another look at essentially US inflation. We also get the Michigan Consumer Sentiment at 10 a.m. on Friday, which will be interesting. But again, the earnings are going to be quite interesting from the mega caps and these other additional companies. So something to keep an eye on, as well as that option expiration and then those ranges that we mentioned. So with that, we've reached the end of the show today. If you enjoyed the show, if you learned something, we welcome you to thumbs up, like the episode, subscribe to our channel, and share with your friends. If you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning the best interest rates on your USDC and your Bitcoin. We have the best rates on dollar loans backed by Bitcoin if you need liquidity and don't want to sell your stack. And our most recent product, our Bitcoin mortgage, lets you own a home or buy a house as big as your stack. More details at ledn.io. Thank you, everybody, for sticking around for us for the show. See you next week. Take care.